Good afternoon. Let's get rolling. Hello, my name is Scott Miller, and I'm one of the leaders of the Mortgage Notes for Beginners group. And you're in REI USA, and this is the right place. I got to tell you, this is like going to community college about real estate, learning everything that you ever wanted to know from people who are actually in the field practicing what it is that they're discussing. I'm excited about mortgage notes. I'm also a buy and hold investor in the Atlanta, Georgia area, but I have really enjoyed going through the REI USA sites, spent some time looking at a bunch of folks on REI USA. So congratulations for investing in your future with your time and your talents. I can tell you, I have really enjoyed it. Christy and Noah Harris, who will speak tonight, they're the South Carolina leaders. Christy had a fantastic presentation on mobile home parks and other investments in the last REI Con, or Badass Investing Women. They own mobile home parks in South Carolina. I mean, what a great idea. I've owned mobile homes, but not entire parks. Great stuff. Mike Watkins talking about wholesaling. Stacy Rosetta talking about self-storage. Who doesn't want to own self-storage? It just sounds so good. So today, we're going to talk about mortgage notes for beginners. And it's something that's near and dear to my heart. I got involved in it in the 1990s when I purchased an online course. Excuse me, not an online course. When I purchased a course, it said, if you go find these notes, we'll buy them from you. Well, to make a long story short, we found myself and a friend found a lot of notes, but they never bought any. So we bought for ourselves. And that started an adventure in note holding and investing that I've really enjoyed, and I found to be a nice adjunct to be included along with buy and hold investing and rehabbing, as well as other forms of real estate investments. So we're real excited about it. And we'll go ahead and get down to business. And once again, you're to be commended for coming on and investing in your future to learn numerous things here at REI USA about whatever aspect of real estate investing that you have that draws your interest. So seller-held mortgage notes. We're going to talk about those today, give some basics. And also, please, anytime when I'm speaking or talking through the presentation, feel free to interrupt with questions or anything like that, or discussion topics. First, let's talk about what is owner financing. So owner financing is a transaction where a property seller finances the purchase directly. It's also known as seller finance, seller held, or seller carryback mortgages. And what it really is basically you become the bank, you enjoy all the advantages that the bank has, which is interest, which is being covered by insurance, which is basically having the entirety of the law on your side as it relates to collections and that sort of thing. So how big is this owner financing market? Is there anyone doing this at all in the United States? Is this just a phantom? Are there notes out there for you to buy on the secondary market that are out there that people are collecting payments? Now let's talk about the size of what that note market is. And I think you'll be impressed with the size of it and the fact that it doesn't get a lot of mention in the popular press, but there's all over the place. People are taking owner carryback notes to sell real estate and residential and commercial real estate. So between 2016 and 2019, 364,000 of these things created in the United States. Over 50% were residential transactions. Now we purchase mortgages in the state of Georgia. So we have a special interest in Georgia, so we pay close attention to it. But the thing to me that is startling is the statistics with respect to how many there are. So there's approximately 3,800 notes created in Georgia in 2019. And Georgia happens to be the 6th most popular state for owner financing. That's not necessarily that important for our purposes, other than what you'll find about these owner finance notes is that they typically pop up more frequently in states that are investor friendly, and the laws favor creditors over others. So you'll see in just a minute some other information on that. So here we got, so this is kind of a breakdown of states for top owner finance notes. Number one is Texas. Well, Texas is really big, as we all know. But Texas also has a very investor-friendly atmosphere with non-judicial foreclosures being the way that people repossess houses there, which is a shortened route as opposed to going through judicial foreclosures. And that's another reason why the state of Georgia is in number 6, even though in terms of population and real estate transactions, it's nowhere near number 6, right? In terms of population and transactions and that sort of thing. And you see Florida has a fairly large number as well. It kind of tends to break out that the states that are more, what we call them red, tend to be a little more investor friendly, and oftentimes you see more real estate notes there. And so an interesting look to me is the dollar value of those notes originated. Almost $24 billion of these things originated in calendar year 2019. 86,000 filings. That's an awful lot for someone to shoot at if you were interested in purchasing mortgage notes after they're originated, which is primarily what we're talking about. Of course, you can always finance your own houses with seller carryback financing. It's a very easy thing to do. We can discuss that. But there are additional profit opportunities that are provided to you as an investor when you purchase them after they've been originated and after the seller has had the opportunity to collect payments over time. Sometimes they find that, the process of waiting for the payment to come in or addressing perhaps non-payment can be tiresome. And so sometimes they seek to sell all or a portion of the note that it is that they have. And that provides exciting opportunities for you and me to get higher rate fixed investments, not necessarily meant to replace other investments, but a very competitive investment in terms of getting higher yields, steadier cash flow. And then of course, for those of us who are buy or hold investors, if for some reason someone fails to pay and you get that house back, you know what to do with it. And it's kind of an exciting, we'll call that the call option for the seller held mortgage, which is if someone fails to make a payment, you may own that house, and that might be just okay with you. It sure is okay with me. So why would sellers do owner financing in the first place? What's in it for them, right? So it's a passive income with a higher yield. It allows folks to sell homes that they may otherwise have an inability to sell because there may be some physical issues associated with a home, or alternatively, there may be there's a large pool of buyers out there that simply cannot get qualified through the traditional process of going and getting a loan. And this is actually one way to do good at the same time you're doing well, right? To do good, to provide somebody a home and a place to live, even though they couldn't get financed down at the bank. It also tends to provide a reliable monthly income for sellers, and it's secured by an asset with which most of us are pretty intimately familiar. Also, for those that do the initial financing, you can control risk and yield through the notes which you purchase. So for those of us that buy notes, you can buy notes in any denomination, all the way down to sub $10,000 notes. Those are available all day long. You can put those things in a IRA or tax deferred account if you do self-directed investing through through firms that do self-directed investments, and there are a number of those. You can buy any size note that you want. Some people prefer very large notes, plus 100,000, 200,000, what have you. Others of us prefer lower value notes. I tend to actually like the lower balance notes because you can tend to get higher yields on them. And they tend to be tied to real estate that I would be more apt to want to own. For instance, if something didn't turn out the way that I thought that it should. So banks do it. Why not you in terms of being an investor in notes, right? It's a well-worn practice among banks and large financial institutions. Anyone who's paid on a mortgage note has had the experience. So for instance, your note may be serviced by SunTrust, and SunTrust sells your note to Bank of America, and then you send your payments into Bank of America instead of SunTrust. This is what we're talking about, except you're talking about typically buying these notes from individuals as opposed to institutions, although you can buy them from institutions. Typically, you tend to get better deals working with individuals. So it's a well-worn practice, negotiable purchase price, face value remains the same. For the person that's making the payments, nothing changes. Assignments are one-page document. You may have seen an assignment filed in the real estate record somewhere, wherever you live. It's basically a one-page document. It says this goes from SunTrust to Bank of America, and nothing else changes about it. The assignments fall under contract law, typically not real estate law. There's plenty of regulations for the big guys, but for people like you and I, there's very few regulations, and that's quite a blessing. We'll talk a little bit more about that in just a second. So a little conversation around state regulations, primarily just to let you know that as it relates to purchasing for your own account, most states, in fact, all states but one, do not require investors to be licensed to purchase these notes. In particular in Georgia, since we practice in Georgia, we'll talk a little bit about Georgia regulations as I go. You're exempt from licensing requirements in Georgia if you service 5,000 or fewer notes, if you don't create more than 5 notes per year. So there's great big exemptions for what I'll call the small guy. So the folks that are like you and I that may buy, a couple dozen or whatever, however many notes you decide you want to buy, very lightly regulated, don't need license typically for your own account purchasing. Only really need license if you're going to buy and sell. So if you buy it from somebody and sell it, that doesn't apply in most cases to finding a note and assigning it to an investor. It's a different transaction. So here's a listing of some licensing requirements for all the states, just in case, since we don't know exactly necessarily where you're calling in from, you might see your state there. As you might imagine, California, New York tend to be more heavily regulated than places like Georgia and South Carolina and what have you. No big surprise there. It's pretty lightly regulated business, thankfully. So the Dodd-Frank Act, what does that apply to? Well, that typically applies to people who are originating loans. So if you were to buy a loan from someone else, you find that the Dodd-Frank Act doesn't apply to you because you weren't the one originating the loan. And the SAFE Act typically doesn't apply because you're buying these after they've been originated. And that's an important distinction. In most cases, if you originate a loan and it's not an investor loan, as to be an owner occupant, you could be covered by the Dodd-Frank Act. So what are the pros of being a note investor? Well, there are a number of pros. And first off, you get paid a monthly like a rent check, except for you don't get a 2 p.m. phone call for leaking toilets because you're not the owner, you just collect payments. You can customize these to your investment goals and your risk profile. So if you have $5,000 to spend, you can go find a note that you can buy for $5,000. You can keep it outside or you can place it inside your tax deferred account. This is important because, and also because, well, the reason this is important is because you can start with small amounts of money. You don't have to show up with large sums of money to do this. You can look in the zone that it is that you want to own notes, for instance. Your risk profile. Some people are very, very risk averse, and that's okay. So then you would only buy notes that people are making timely payments and that you can verify their timely payments through multiple techniques. And in that case, you know, you're going to take a really close look at due diligence. At the same time, if you feel more of a you're less risk averse than others, you might consider buying notes that are in default or that have had missed payments, with the idea that you would either work with the note payer to get the note current, or you could recast the loan. You could help somebody to stay in their house. At the same time, it could be that you may be buying a note that the owner of the home has no interest in bringing the note current. And so there's a possibility that you may be taking that note back through a foreclosure. It's not as hard nor as difficult as it's made to seem in the media. In Georgia in particular, it's just one phone call. Send it to a foreclosure attorney and they'll take care of that for you if you're so inclined. But you get to set your own investment goal and your risk profile. It's potentially great returns if it's structured correctly, and depending upon how you do it. And one thing that's interesting about the note business is that when you get the call for someone to refi their note, that's a good thing. That means that money came in early, and since you had bought it at a discount to its face value, which you likely will have done, then you're going to have a greater return on your money. There's simple collection procedures similar to landlord tenant laws in most states. So, basically you send a late letter, right? With your late fee included in there. It's very easy to write. It's all part of the promissory note and either the deed to secured debt or whatever it is that the state calls the thing that you file at the courthouse to let people know that you have a lien against that property. It's lightly regulated. In fact, very lightly regulated. It's not subject to the foreclosure moratorium. That foreclosure moratorium only applies to federally insured loans. You will not be buying federally insured loans because Freddie Mae and Fannie Mac will not sell them to you. I don't think you'd want them anyway if they did. But that foreclosure moratorium only applies to there. You won't be subject to the proposed Consumer Financial Protection Bureau moratorium that only applies to note servicers that have 5,000 or more loans. I remember a friend of mine ringy-dinging me when the CFPB came out with these proposed regulations and said, "Oh man, this is gonna wreak havoc on your side business here." And I went and I read it and I said, "Brother, I'll tell you what. If I'm servicing 5,000 notes, I will pay somebody to worry about the moratorium that's here. I know that this doesn't apply to me because I don't have 5,000 notes. And right now, I'm not looking to get there." So cons of it. Well, the con could be that you might end up being a landlord. You might be like a landlord, but you don't get to keep the underlying asset unless somebody fails to make a payment and fails to make multiple payments and decides they're going to move from the house. in which case you may be indeed getting the asset back, that house back. Non-payment is a right. You have to decide if you feel comfortable with that. I would say those of you who have been landlords in the past, and if you're comfortable with the process of working through tenant non-pays, this is close to that. It isn't a liquid investment, although I would say that there are people that will buy your note if you get into it and you don't decide it's not for you. There are folks that will buy your note. And so it's not an instantly liquid investment like a stock, but it can be sold. So how do we value these things, right? This is one of the things that we're going to talk about in next month's session. We're going to get down and dirty with our with these financial calculators. If you don't have a financial calculator, we're going to have some fun with financial calculators. You can buy one for $20 at the Office Depot. If you don't have one, there's only 5 keys on this thing that you have to master to understand the valuing mortgage notes, valuing bonds, understanding yield to maturity, yield to call, all sorts of things. But so there is some complicated math to it, but once you learn how to operate the calculator, it does the hard stuff for you. So valuing these notes is similar to bonds and annuities. They're based on a desired yield. So the yield goes up when you buy the mortgage note at a discount and down when you buy the mortgage note at a premium. And that's good stuff. The more you understand about that, the better you'll understand your investments across the board. And I've personally found this very satisfying. Once you understand how to work that calculator too, it puts you in a position to help people to sell their notes to you in a way that meets their needs while meeting your yield needs. Because most oftentimes we get in this business because we like income on a monthly basis, and we'd like a yield that was better than what you can get from fixed rate investments like bonds and those sorts of things. And I will tell you that these yields are much higher, depending upon what your goal is. You can get yields a lot higher. And but understanding that math helps you to understand why it may be a good thing for you, but also helps you to understand and be able to calculate yields that you're getting on your rental houses, for instance, cash on cash return, those things that are actually important over time. And one of the reasons that you need to raise rent if you're a buy and hold investor is that inflation, what inflation does to your rent payment, because you may have noticed that your taxing authorities are raising your taxes as fast as they can. And they can do it once a year in Georgia. I don't know how quickly they can do it where you are, but they have really been on a tear lately. So basically, probably the most important calculation is looking at a present value of a note, and then being able to calculate what sort of present value or amount you would pay somebody for a note that they are holding so that you could get your desired yield. And there are the criteria, right? So the future value of the note is going to be 0, typically. The rate of return that you desire and the number of periods. So the number of periods means months, typically, since you're expecting to have a monthly payment. So here's a copy of a calculator that my partner came up with, just for you to see. Oh no. Okay, you're telling me you can't see my screen. Can you see it now? Can't see it now. Okay. Can you see it now, Deborah? I apologize for that. Okay, fantastic. My apologies for that. So here is a Excel calculator that we've kind of brought together. Excel has some many good functions that can help you put together a calculator for looking at what a target yield to maturity is based on a note. I also saw in the chat that somebody had questions about where to find these, that you're in North Carolina. The note source that we use is notesellerlist.com. It's called Advanced Seller Data Services. You can see it right there. They sell in all 50 states. You tell them what it is that you're looking for. So for instance, I want notes from 10,000 to 50,000 that were originated in the last 4 to 5 years in the state of North Carolina. Or alternatively, you can give them the counties that you prefer. They can pull those. They're really good. Their data is really sharp. It kind of shortcuts you having to go and figure another way to get it, but notesellerlist.com. So where to find notes. So if you're interested in just getting an idea of what is out there, go to paperstack.com and check out sales, note sales nationwide. So all it is I guess I would call them a note intermediary. What they do is they advertise the notes for others, and then they assist investors in doing their due diligence. So if there's a place where you'd like to invest, in all likelihood, they have notes in your state. That's the plus side. You can see what's going on. You can see what the request is. So for instance, you can see what the requested amount is. So some people will have a UPB or unpaid balance. That's what that means on that website. And they're looking to sell it for a certain amount. In most cases, that is a negotiable thing. So in other words, you can make them an offer on that website subject to you doing your due diligence. So I recommend those who have an interest in note and potentially note buying, even if you're not very serious about it, if you just want to get a peek at what's going on out there, go there to take a look. I will say, one thing I would say is that naturally you get a better yield when you're dealing direct to note sellers than if you're looking on a website. It's just the nature of the beast. When you're dealing person to person, you're more apt to be able to get higher yield, which is probably something that you're looking for. That said, I don't want to dissuade you, because your goals may be met just fine by going to paperstock.com and buying a note. And so in a way, you can reach out for these things just like you reach out to look for houses. So for instance, cold calling, yellow letters, emails, postcards, website. We have a website, notesandliens.com. Don't get a whole lot of traffic through that. We mostly get our notes through direct marketing, where we write letters directly to the sellers themselves. And we've tried it with postcards. Postcards don't yield quite the response, although they're certainly easy to do. The unfortunate thing with that is if it's easy to do, oftentimes someone else is doing it. But we found that we just get a much better response from that situation. So here's a case study just to look at to kind of whet your appetite for a recent note that we purchased in the Atlanta, Georgia area. Now, we kind of have a little bias around Atlanta over other parts of Georgia, not just because we live here, but because the Atlanta, Georgia area, the 29 county metropolitan statistical area of Georgia, produces 70% of all the gross domestic product in the state of Georgia. So the economy is very strong. That being said, that's why we really like it. Because one thing that you will want to look at when you're investing is you do want to look at the economy around where you're investing in a note. If the economy is bad, or if the population is going down substantially, and it is in a lot of places, you want to question if it's something where you want to purchase a note, because you may purchase a note and find that you end up owning the house. And so you will want to qualify this as if you were purchasing the house, right? Because you could indeed end up owning a house. And there's probably not much more frustrating than owning a house somewhere that's very remote and you can't find tenants. Or alternatively, you can't find someone else to buy it because the population has decreased so much. So let's look at this note example. So we got contact from a note owner on a direct mailing. It was originated as an $89,000 first mortgage secured against a renovated single family home that was tax appraised for $120,000. The note rate is 5.5% interest, and the payments are $731.80 a month. The balance when we purchased it was $69,927. The note had a total payment of 180 payments, so you're talking a 15-year note. At that time, 54 payments had been made. And we purchased it for $41,267, which gave us an annualized return of 18%. These yields are available. And I think that if you look and seek those things, that you can find that they're not available at the drop of a hat. You have to negotiate for these things. And not everybody is going to sell you a note that will yield to an 18% return. But this is actually right in the middle of the returns that we have in the note portfolio that we've been building. That's just one example. Next month, we're going to go through some calculator magic and get in the midst of that. So considerations when you're buying a note. The first one is, would I want to own the collateral underlying the note? In all probability, you would never have to take a note back, but we've certainly had to take houses back that were secured by seller home mortgage notes. And had we not considered in advance what to look like, so the investment to value, we might have been in kind of a pickle. But when a note goes bad and you're in there at 40 or 50% of loan to value, it won't affect your psyche, right? You'll just take it back and do with it what you need to do. Now, in today's environment, if you had to foreclose on a note, you'd probably be contacted by a million investors who'd want to buy the note, or who would come and buy it off the courthouse steps of the area wherever you live. So you would get the full note value plus your costs of the foreclosure back. what yield would you accept? So what yield makes sense for you? And so yield is always, it's always in there with return, yield along return versus risk. Those two ride together. It's hard to get them separated. So would you accept a 9 to a 15% yield? The note buying companies that do this nationally, they will accept 9% yields. The issue with them, of course, is they are looking for some very plain vanilla notes. So they want things that fit in a little box. Whereas you and I, we're not subject to any of that stuff. I buy a 10,000 note all day long, $10,000 note. Just keep an eye on the cost of closing, because you can get those down really low. In fact, we got those down to $100 or less if you work at it, right? It's like any business. Due diligence, you want to put the due diligence in, right? Because you really want to know what you're getting out there. Am I getting this person who pays on time it's been represented to me? I need to see some paperwork that shows me that. I'm looking at the value of the collateral, right? Like, did somebody loan way too much on this house, and the note that I'm looking at is at 110% of the fair market value of the house? You need to know that, right? Because you may want to make an offer, but you certainly want to reduce your offer to take into account what your situation is. Purchase expenses, right? You heard me refer to that. So sometimes purchase expenses can be very high if you close all your notes at an attorney's office. That can tend to add up. That may cost you up to $750, something like that, maybe $1,000. It just kind of depends where you are with respect to how much the typical fees are to do this kind of activity. You can get those down really low. In fact, you can process assignments on your own safely. Excuse me. And so the economic factor too, particularly important for those of us who are in states that are majority rural. There are areas of our states that if you look at the population, every time somebody reaches age of maturity, say 18 to 22, they leave and they're not replaced. So that has an adverse effect on businesses locating there, jobs locating there. And you just need to be aware of that when you're purchasing notes in that area. So any questions or comments? We're happy to do anything we can to help you. You can reach out to us at our website, notesandliens.com, or there's our number and email addresses. Anytime, we're here to help you. We are fellow investors. We want to see you succeed. We hope that you are enjoying REI USA as much as we are, learning about a bunch of different stuff. And with that, I will open up for questions, comments, whatever you have. Does anybody, let's see, so yeah. Does anyone have any questions, comments? Well, so next month, what we're going to do is we're going to work through some calculator. Thank you, Andrea, I appreciate that. We're going to work through some note math and assist you with that. And by all means, please reach out to us if we can be of assistance to you. We will be doing this once per month, every third Thursday of the month at noon, between noon and 1 o'clock during your lunch hour. Hope everybody gets a lunch hour where they work. And in the meantime, we're here to help in any way that we can. Please reach out to us. And thank you for joining me this afternoon to talk about seller held mortgage notes. And I look forward to seeing you around on REI USA. If no one, where is a good, sorry, I see a brand new to this industry. Where's a good place to learn about the industry? Well, Deborah, there's a number of good websites to learn about this industry. It kind of depends on what it is that you want to learn. One that I like a lot is noteinvestor.com. Okay, so it's just noteinvestor.com. In fact, yes. So noteinvestor.com. There's a lot of free information there. And not only is there free information, there's examples of how to use how to calculate mortgage yields. There's also discussion around networking groups. And one of the things that we're trying to do here at REI USA with this group is to create a networking group where people can share tips, can buy and sell notes amongst one another. Because you may come across a mortgage note that you don't have no interest in purchasing, but you may want to sell it, and you may be interested in getting an assignment fee for that sort of thing. So what we're trying to do is create that environment here. Stacy has provided a fantastic environment for all of us to get together here, to share information and to build our businesses. And that's kind of what I just love this concept. So it's fantastic. As far as, let's see if I can think of some other ones there. So let me ask you this. Deborah, did you have an interest in working to assign notes to others? Or is your interest in purchasing for yourself, or maybe both? There's a reason I asked. There are other. Purchasing for yourself. Okay. I think noteinvestor.com is really good. And we'll start you off on all the information that you need to understand. In other words, talk about due diligence, talk about how to calculate yields, talk about marketing too, because marketing is important. Of course, marketing is important in any business, right? And I think that you'll find that you'll become quite adept at this very rapidly. And to me, that's part of the joy in this, is that the marketing for it is very similar to marketing for single family homes, whether you're an investor with single family homes or not. You know, your IRA companies. So Advanta IRA, your Quest IRA, those people that do self-directed, they often have panelists discussing how to buy and put seller-held mortgage notes in your IRA, for instance, because they service the IRA. It's to their benefit to have people to talk to you about that. So I recommend you look out for that. You can sign up for that at the Advanta IRA website or Quest IRA. All these guys that do self-directed handle these seller-held mortgage notes. They won't do collections for you, but they will collect the payment, and they will let you know if for some reason payment fails to come through. But they do all that stuff for you. It's a great way to build your wealth passively while you're working at a job or while you're working the other aspects of real estate. We certainly don't represent that this is the one way, the truth, the light. This is one among many the more passive investments around real estate that we're excited about, because we like to achieve that 15% yield. We love that monthly note. We love the stock market. That's in the stock market too. This has some special things that we really enjoy, and I think that you will too as you whet your appetite about it. Any let's see, anyone else have any questions, comments, concerns? Awesome. Well, thank you folks for hanging out with me and talking about one of my favorite topics, just seller-held mortgage notes. Once again, if we can be of any service to you, please reach out to us and let us know. We'll be happy to help. With that, have a great rest of your day, and we will see you next month if there are no additional questions, comments, concerns. All right, thank you so much. Have a great day. We'll see you around REI USA. Take care.